Jumbo, 400 basis points.
Yeah, you say jumbo.
Jumbo.
Well,
That's
I guess we're expecting it, Laddie, even though it's more than
more than expected.
A lot.
Right.
No, but we had a guest yesterday who said 700.
He's the only one I heard that from.
He was closer to the truth than a lot of us.
He was the closest.
Exactly. Anyway, let's see what the market is looking like at this time. I have to tell you, the NGX is receiving a very big blow, building from yesterday's negative trade. It's down 0.83% intraday. So I just wonder, and I don't know, I feel like crying actually, because I was so connected to that 100,000 point. Now we see we've lost that. We are 99,743.19. South Africa is also in the red, 1.17%. That's 72,288.19. Looks really red there for Africa. But let's see for the EJX, gives us a little bit of breather right there. It's up 1.45%. But Kenya is down again, 0.55% in the red. Still talking about the NGX, so we saw that results from Nestle PLC. They've reported a loss before tax of 104 billion for the year ended 2023. That's to profit before tax of 71 billion. Same time upper year, that's 2022. And this is on the website, the NGX website. The company reported foreign exchange losses again. And this is even when the rates were not this bad, talking about the naira to the dollar. So I wonder what will happen to companies. We could count how many companies, multinationals, left the country last year because of foreign exchange losses. Even some companies in the country actually recorded foreign exchange. I think only the banks benefited from that, and we do hope this stabilizes really soon. We hope that the policies and the efforts of the government, of the Central Bank of Nigeria especially, yields fruit, because we cannot afford the unemployment that will come with losses such as this that we see in Nestle. Well, still staying with Nigeria now, let's go to the fixed income space and see how reactions have been trailing that 400 basis point. That's about 4% increase in the lending rate. And what that's doing, this is an aggressive effort, obviously, to mop up currency in supply by the central bank, inevitably by the country, by the federal government. Well, let's have to discuss what's been going on in the market with Demola Oshuntoki. He's a fixed income dealer with Access Bank. Hi, Demola. Good afternoon.
Good afternoon. Thanks for having me.
Great. So it's not yet 24 hours since we had that rate hike. Very aggressive, very tight right there. Has the market been reacting today?
I think, as you said, we've seen quite an aggressive hike, moving by 400 basis points. I think this is the highest that we've seen, especially in recent years. But I think this was what was expected within the market. So if we look at the previous day, we already saw a number of these, even on the bills and bond side, trading just above the previous MPR, which is 18.75%. We saw them trade at about 19%. So this was already factored in terms of there was an expectation regarding the market in terms of what this hike was going to be. There were some chatters around anywhere from 200 to 500. So with the rate hike of about 400, it was within the expectations of what was of what we expected. So essentially, all of this had been factored in, and we're not seeing any cause for concern within the markets or any kind of panic selling at the moment. So I think all of this had already been factored in.
So we had a quiet market Monday, Tuesday. Is the market still quiet now that the decision is out there?
Yeah, so what we're seeing now is, I think, because the expectation was that there was going to be a rate hike, I think taking the words of what the CBN governor said, there was an expectation, and this was essentially the only direction to go, where we had inflation increased by about 7% from June last year to date. So there was only one way, which was to increase the rate in a drive to further control this inflation. So as a result of that, like we've not seen any cause for concern within the markets, as people had already factored this in. So these bonds as well as bills were kind of already trading above MPR, especially within the bills market, where we saw the long end trade at about 19% yesterday, and this is still the case today.
So we see that the second quarter auction calendar is out. We have an auction next week. That'll be the first for March. And we also hear that foreign investors have started trickling in. How much of that do we have, and what are the expectations as we look forward to next week's auction?
Yeah, so next week we have about 300 billion that is going to be offered at the NTB auction. And the implication of that is what we're expecting is we'll see if the CBN will work proactively with the DMO as well to upsize. You know that the last NTB auction, there was about 256 billion that was offered. We saw them work proactively again to offer about 1.5 trillion in advance of that. So what we saw is we saw them maintain rates at about 19%. 19% was maintained around the 364-day paper. And for this bond, we're waiting to see if they would continue that trend of maintaining that 90%, or if we could even see an increase in terms of a higher stock rate, which would resultantly mean a higher yield for FPI investors. We know that, especially within the coming months, what we've seen as a result of the elevated levels within the NTB auction is we've seen further traction from especially the FPIs who are looking to play within this space as they're looking to get some good returns on their investment. At 90%, that's about 23% yield. So a good return for a number of foreign portfolio investors.
Yeah, but I mean, some economists are saying that the yield is still not enough to cover up the inflation rate. So that would be a negative for investors, especially the foreign investors. Do you see that playing out?
So I think you're right. You know, at 23% yield, it's still negative real returns, but I think I would look at it from a different approach, which is for FPIs, what they're looking at is a good return on their investments. And by increasing the hike by 400 basis points, again, we wait to see if they would maintain that stop rate of 19%, or if they would increase that. But currently, it's still giving relatively good returns on their markets, for a lot of FPIs. And further down the line, what we want to have is a lot of FDIs play within this space. What they're looking at is, one, good returns on their investments, but two, also confidence within the market. And I think that confidence, we have seen that trickling in terms of the CBN governor. He's been consistent in his approach since he's come into office, which is increasing the rates. And aside from that, I think he's taking a rather bold decision, but he's been simple and clear in terms of what the objectives were in terms of taking this decision. So essentially, he's looking to do two things. First is which is to resolve the inflation. Aside from curbing inflation, what he's also looking to do is provide a certain level of stability within the FX market. And I think these are further things that would enhance the mindset of a lot of foreign portfolio investors in terms of looking at Nigeria as a viable space, for a lot of investments. And we're expecting to see a lot more increased flows, especially within the FX market. So I think, what we're looking to do now, what he's looking to do with this drive is essentially make Nigeria a viable space for a number of investments, which is what we're seeing. So essentially, as a foreign portfolio investor, you have the choice of looking to invest in Nigerian securities as you're going to get, much better returns than probably what you see in more developed markets.
All right. Thank you so much for that. Demola Oshitoki, fixed income dealer with Access Bank.
Thanks for having me.